Welcome to forextrading.com. Let's talk about different markets correlations. Let's see a few charts. Most basically what I'm going to tell you right now, a few things that you probably know when you're looking at advanced videos, that some of the currency pairs, some of the instruments are very much correlated. The basic example of this correlation would be euro-dollar currency pair and cable, which is Great Britain pound with dollar. Of course, as you can see very significantly here, that the price movement is very much the same in a few moments different on the chart. You can see some percent of the correlated moves, also with different dollar connected pairs. It's pretty much obvious that dollar is moving the same way in different pairs, even though those euro, Great Britain, Kiwi, and other different currencies doesn't really have to have anything to do with each other. So there are also different instruments correlated. Right now the market, the globalization, global markets are so connected to each other. They coexist with each other. So the gold, the stock exchange, the oil I'm looking at right now with those currencies, you can see sometime very strong correlation between those instruments, and some other time you can see very weak correlation, but most of the time you will see those moves that when the market will going down. Here we got US 30 index, and when the index is going down, when the general stock exchanges in the world are going down, the gold will be flying up in the sky as the opposite instruments which the investors will be running to when the situation at the stock exchange markets will be scary. So the same with oil. It is also correlated to stock exchange movements. It's correlated with general sentiment. It's also correlated with many other things like demand on the market, which is also correlated with situation at the markets, with global economic situation in each country and the global world economy. Anyway, what we're gonna discuss right now is the special correlation between the stock market and the currency I'm watching the most, which is the main pair euro-dollar, of course. So right now we're gonna come into this 4-hour chart when we have euro-dollar at the top, and we got S&P mini contracts. As you can see, at some charts you will see this kind of correlation movement very strong, or you will be seeing it very strongly or even almost the same kind of move in some situations, and at different time frame you will be seeing no correlation, or it seems to like the markets move very different way. Both expressions are kind of true. It depends what kind of time frame are you using to look at the market. As far as I can see from my perspective and experience, if you are day trading, if you are doing some trades during the day, when the situation at the markets with currencies and everything is very important, when you don't want to miss anything when you're entering the market, that the stop loss you execute will be exactly okay to go with the market and to profit from the market. Anyway, I'm trying to say that doing anything, trading at the 30-minute, 1-hour chart, 15-minute chart, you need to see how exchange stock exchange is doing, because when you're very close to support and resistance, when the stock exchange will move significantly, it will also drive the currencies to move up or down whenever the correlation is with the pair you're looking at. So right now we're looking at euro dollar with S&P mini contracts. The correlation most likely will be positive. So that means that you're looking here, for example, for some bigger sellout, and it happens almost exactly the same with S&P 500 contracts. Somebody could say, yes, but in this particular moment, most of the instruments, even oil or gold or any other currencies, were in the sellout position because market was in panic. Yes, maybe in some situation like this or other, market is kind of panicking. Traders are in panic, so they sell everything they had to this point at long position. They sell it very sharply. They get rid of it, everything they have sometimes, or just using the situation to go short. Anyway, it happens sometimes with panic. It happens sometimes without any scary movement. So it just happens that it is correlated. Anyways, I'm not gonna explain fundamentals because we would have to talk another 15 to 30 minutes basically to discuss the situation, the global situation between stocks and currency pairs and other instruments between demand and other fundamental definitions. Anyway, the correlation exists. You can see some points it is moving very similar. Some points it is moving different. My point is, when you're looking at the 30-minute, 1-hour chart, when the price movement on the currency pair is moving very differently than S&P 500, for example, you should be very cautious. So what you would think of is maybe to wait, maybe to check another time to see how the support resistance is doing here on those charts, to see what kind of risk are we taking if the for example, if the index will go down, when the indices will be going down very sharply, and the currency pair looks to be going long, and you think you will be going long. So please take a look at some charts whenever you're trading to compare those two things, especially when you're doing those trades during the day. Or let's see just at the some other charts. You will be know better what I'm talking about. You see here we got daily charts. Those seem to be different, very much so. But if you can see some slide down here, you might compare those to the exact moment the indices were accelerating in the downturn. So we got some points also here when the indices were going down significantly, of course. It was the same moment when the this big slip occurred. But we got also other moments when on daily chart we see it was very similar. I'm not saying it is all the same like you're looking here on daily chart. It is very different. Here the situation looks generally different. But also when you're looking at the smaller charts, let's take a look at 30-minute charts. You see here this kind of move, it looks almost the same. And the minor candles going down a little bit. These are very similar moves. So what I'm trying to say, if one of them will be accelerating very significantly, I'm saying about the downtrend going with just one candle, like from this point to this one at 1 hour, 2 hour, 4 hour chart very quickly. You will see probably, if the situation doesn't look so critical at this chart, euro dollar, you will be seeing in the near future the euro dollar probably will go buy with this move of the stock exchange movement. So sometimes it happens that the stocks are going down very suddenly and the euro is staying the same at the right moment, or just slipping like here just a little bit when we have aggressive movement on the stock exchange. Then it means simply that we have some buyers here with euro dollar pair at the currencies, or we are not so sure about the more slippage with the stock exchange, or we got more buyers coming in the future, or the sellers doesn't really want to go in this situation. Just like here, you see, here we got this breakout point, you would say. The euro dollar can't really start accelerate after breaking this this support resistance 27.21 and this trend line. I'm not really the great fan of those trend lines, especially on the 30-minute 1-hour charts, because they tend to get you in the wrong kind of trades from time to time. As you know, if you just fail every 1 on 5 times when entering with the trend, you will always sometimes fail with some other suggestions of the signals or support resistance line. So there are many situations you might be failed. So what I'm trying to say, we don't need another thing to look at. Like I'm not really using those trend lines unless they are very significant. Here we got it. We see it very clearly, and that it is shaping to give us some trend. But if we see another breakout, it might be very important for those sellers coming in. The conclusion for the correlations is, if you are experienced enough to compare some different instrument charts or compare different currencies, please be cautious that those are in sometimes some moments correlated, like we see, for example, here the right moments charts moved aggressively high, and here we got the almost the same kind of move moving right now. Please remember to look at those different charts as well when we want to be aware of every risk we take in such moments. I'm almost always looking at the different charts, different time frames, different instruments. Sometimes there's been a time when I was looking at different currencies and connected with the dollar to see if I'm not really going the wrong direction when entering the market. Right now I'm focused on those two to keep it simple, and I hope you will keep it in mind and not to forget about it. I hope you will take some good trades on those suggestions. Thank you very much for listening. Hope to see you soon.